The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting here for Larry Pesavento. I'm part of the team here, and it's my pleasure to be sitting in because Larry is taking a well-earned break, and so I'm here this afternoon in the noontime hour, and I'll be looking at the different currency pairs. I'll be looking at some of the commodities, and at the same time, I will also give you an analysis of based on the futures on what I'm looking at in the market itself. The cash Dow is up 120 at 13,201. The S&P is up 1354 at 1410. The composite index is up 38 at 3106. Now, let's go through the ES Mini. The March contract needs to get to 1408.25, 25 cents above the high of the 19th to start leg C in the Chapman wave. The high so far today, I say so far today because the day's only a couple of hours old and the week is only a couple of hours old. So we're looking at 1406.75 is the high, and it needs 1408.25. Just an eye blink away from trying to do it. In the E-mini's 120-minute chart, this is leg B. The fact that it went above the previous high of 1405.50 back on the 21st is really important in my work because it gives right there. It gives a left side, right side price time match, and that says that if it's able to now close, doesn't have to be in the next 120 minutes, it could be earlier than that. If it's earlier than that, it extends leg B, and the next level I'd be looking at would be 1407 to 1409. Now, what's even more important about this is that if it does it now, you should still go to C and D, peak C and D. Oh, I haven't explained that. In my work, this is the Chapman wave is the umbrella. It's the signature name for all the different techniques that I have. But the core to this particular technique is when you get a left side low bar, that a most obvious left side low bar. In this case, if you're looking at the 120-minute chart, that was at 10:30 at 1380.50 on the 23rd of March. That is the most obvious low bar, and it was right up on the 200-period exponential moving average, one of the technical tools that I use. Now, you'll see completely different tools to what Larry uses. You know, here at TFNN, we all have our toolbox. Mine is just this humongous Sears and Roebuck toolbox. I have plumb lines, and I have drop buckets. I have everything that you need. So this is very important. In this left side, right side time price match with an inside wedge, let me just draw that clearly, we've gone exactly to the point that it should have gone right at 10:30 this morning. And now what's important is from this left side low bar, because we've made a peak B theoretically in the Chapman wave, yes, that double top is a potential issue. That's why I'm saying it needs to close decisively over 1406.75. As soon as it does that, that should extend this move in the 120-minute chart to a leg C and a leg D, and then you've got to be careful. That tells me that the E-mini contract in the weekly is still in leg C unless it too goes to 1408.25 to extend leg C. And at the same time, this weekly chart, the daily chart that has the pattern that I call the falling axe. It looks like an axe if I draw a handle. If you're looking at Tiger TV, let's just get that going there. If you're looking at Tiger TV, you'll see that there's a line that I can draw there. That's like the handle to an axe right there. And then you've got the blade, the wide blade, that expanding blade. Call it a declining cone if you want an expanding cone, with lower highs and much lower lows. Once you break out above it, there's a chance that if you clear the left side high bar, and that would be 1408, you could in fact make a one-to-one extension to the upside. That's just the way it works. I don't know if it will work this time, but that's the way this particular pattern can work. Now, this is very interesting. When we go to the TFM, it is in leg D. It is already there in leg D in the daily chart in the, what is the TF? The TF is the mini Russell 2000 June contract iShares. Oh, I said March. It should have been June that I was looking at before. So, yeah. And that's leg D also in the weekly chart. So it says technicals are still very good in the weekly chart. The daily chart is improving. The MACD is good. The moving average convergence, divergence, that's the series of highs that you're looking at right here. But I want to see that stochastic way above 80%, and right now it's at 74%. Okay, so now let's go to the NQ. I don't know if I've updated the NQ now. NQ, yeah. The NQ has also started a brand new move. Made a peak D, and this is another one. I'll do it live so you can see exactly what I'm doing. What I do is identify the most obvious lowest low bar. Now, each one of these little circles. Now, if you really want to learn about the Chapman wave, there's a CD that I have called Introducing the Chapman Wave Methodology. I discuss these patterns. I do not discuss the moving averages other than the technicals of the moving averages, exponential moving averages within the MACD and the stochastic. I have a webinar that does that. But everything else is explained. And the instant restart that you can see here from the most obvious low bar that started right there on the 25th of November at 2140 in the NQ, the E-mini NASDAQ 100 June contract. That went to a peak AB, pulled back sharply, then made another AB. Then we got something that I call the overlapping wave. Where did it go? In my CD Introducing the Chapman Wave Methodology, the overlapping wave is a very important chapter. Chapter 16, slide 317. Well, it's other places, but 317 is where the discussion gets more intense. And it explains that I also talk about the instant restart. And it can only occur from a peak D. That's chapter 19, slide 346. Now, what's important about this, it's very bullish if you can recognize it. So it made one instant restart by going to a peak D and immediately starting a brand new buy mode. That was on the 10th of January, breakout on the 12th. Then again, the same pattern at 22.50 on the 3rd of February, pulls back for one day. And the second day, it breaks out very positive. It's very unusual to have two consecutive buy modes with an instant restart. Then that means that the next peak D is bound to be a deeper one. Well, look what happens. The fourth, in the Chapman wave, you go from the most identifiable buy mode to at least 4 peaks. So we've had 1, 2. Now we've got the third one. The third one had a doji top, doji candle. Right on the 2nd of March at 26.44, it pulls back 2 days. It goes down to 25.69.50. What does it do? It starts, oh my goodness. That's A. I'm going to call this a phantom A. Why? Because there was a little dip there, and I like to be as conservative as possible, and because these trade in 25 cents, I think the NASDAQ also trades in 25 cents. I know the E-minis do, because I trade them all the time. So I'm going to call that a phantom peak so that at least I know we're at minimum, not peak B, but I'm calling it peak C for now. It means that we could, in fact, only be at peak D. And I'll call this Chapman wave phantom peak right there. So it says, I've changed the rules, but these are very specific rules that I write about in my CD. And I'm doing it for a specific reason. I'm doing it because I want to be as conservative as possible so that when I get to leg D, even though it could be C, I'd rather be cautious and know that that's where I could start to pull back than be over anxious and say, oh, it's C and there's still D to come. Everything's safe. Nothing's safe once you get to this particular level right here. So this not only that, to have 3 consecutive, no, 1, 2, 3, to have 4 consecutive peak Ds is very unusual. It is really bullish. This is probably one of the most bullish charts that I've seen in the NASDAQ for a very long time. Look at this leg that went from A, pulls back all the way to B. Leg B has been going on from the moment it passed 23.30, the high of the week of December the 12th. All of this, that's B. So this is what I call a phantom B. It could be an E. I'm calling it a B for now, okay? So here we go. That B gets moved over to the right on each candle that makes a higher high bar. So it keeps getting moved over until it gets to there. I don't know. I already have to call it a B. You see there's a peak D. Is this a leg E extension? Not with a stochastic up at 98% of the MACD like that. I do have to call it a B. But it doesn't matter. I don't have to call it anything right now because the MACD and stochastic's good. It's going to be that 120-minute chart that tells me more about it later on. Or if it breaks this 9-period exponential moving average here at 2633, right there. You see that in the weekly chart? Now, the monthly chart is in leg B. I have to call that. So let's go to the QQQ to confirm exactly what we're looking here as well. Actually, I am calling it leg E to be very conservative in the weekly, so we'll call it leg E in the NQ in the contract itself. This is leg D in the daily, so that's gone a little higher than the daily chart of the in the E mini. And here you can see we're up, bumping against the very long-term up channel resistance. You see the green line and the red line? I call that the inside track. In the Chapman wave, there's a little parameter that I devote to what I call the repellent line, repellent zone, right there. If it breaks out above it, that's very important. That's great. If it breaks down, it's not. And look what happened. These are the buy zones. Every time it's got into this area called what I call the buy zone, unless it closed underneath the red line, that would be negative. Just as if it closes above the green line, very positive. That's the propellant zone. So let's go through this. So now that means that the NASDAQ is still doing very well, but it is in leg D. It's getting to the point where you've got to be a little bit more cautious. So I don't want to go to the stocks now because this is not Larry. Larry's show does stocks, does the futures. So now let's do this. We've got the Q, we've got the NASDAQ, we've got the Russell 2000, and we've got the E-mini. The S&P E-mini. Now let's do this. We're going to look at the GCM. This is the June contract of gold. There's a pattern that I talk about very often. It's the rectangle formation. The rectangle formation can last a lot longer than your patience and a lot longer than your money. What do I mean by that? If you get down towards, in the gold contract, if you get down towards the 1560, let's call it 1570 area, towards the 1528 area, that's where you say, oh my goodness, it's going to break down. This is, if it breaks down here, it's going to plunge. But every time it's done that, that's been where you wanted to buy it. It also means that every time it's gotten close to the area of 1790 to 1795, that's where you've got to be careful because it gets repelled. I'll talk about this more. Basil Chapman sitting in for Larry Pesavento. I'll be right back straight after this break.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
One Basil Chapman here. You know, I want to do some other things. I also want to go back to previously when I was on with my show, Tiger Technicians Hour, which is on Monday, Wednesday, Friday, 11 o'clock till noon. I had a call from Warren looking at the JPY. I want to look at that, but I just happened to I've had a little problems with some of my stuff being saved in different places. I haven't been able to track where all of them go to. So I've had silver notated for years and years, going on the continuous contract, going way back. So I had to redo it quickly here. But I'm going to do this very quickly, and because while I've got it up, I'm remembering it. I'm liable to go somewhere else, and then that's just gone from my memory. So I wanted to do that. And in fact, we have a caller online. We've got Ari in Arcadia. Hi, Ari. How are you?
Pretty good, Basil. Why don't you continue with silver, because I was going to ask you about the SLV, since I trade the SLV, but it's the same thing.
Okay, very good. So let's do this. I've got here, folks, if you're looking at Tiger TV, if you're looking at this long squiggly line here, this is what I'm looking at. From the low bar in the monthly chart of November of 2001, and I remember it real well because I got a buy on the GLD at, I think it was 44 or 45 at that particular point. In the silver contract, it made, remember what I was talking about when I was saying in the Chapman wave, the easiest way to think of it is from the most obvious lowest low bar And you'll see me going back on my charts. I'll just go all the way back. It doesn't matter to me if I go back in a weekly chart a year. I want to find the most obvious slow bar that I'm comfortable with. That's when you can start the buy mode, and that should take you to at least a peak D. It could go to an E and an F, but at least a D. Well, look at this. From the low bar of November of 2001, it went peak A in January of 2002, peak B, June of 2002, higher high in July of 03 at 8.140. Then there's a doji. Now, I'm going to give you numbers, but that won't correspond because it's a continuous contract. The dates are perfect. The price gets moved because it gets smoothed out. So it gives you another peak D on in September of 2003. But the MACD and stochastic are still very strong. And what does it do? It takes you all the way above the 200-period moving average. That's that. I'm just dotting it now. That's that blue line that you can see. And it goes to a peak E. It pulls back from the peak E. I'll give you the number, although this is not the same as you'll get if you did it in other contracts. But in the continuous, it's at 11.173, April of 2004. It plunges below the 9-period moving average. That's that beautiful white line that you can see that acts as a support or resistance. And it goes to a low of 8.346, May of 04. Starts a brand new peak A in August of 04, a higher peak, peak B, December of 04, goes sideways for a period of time. In fact, it goes sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then in the 11th month, it breaks out, starts leg C. Leg C goes to 12.336 in January of 06. Well, this is a case where I have no choice, based on all the information that I have on the on-balance volume, etc., to call this a phantom peak. 12.336 is the high of February of the next month. Now, I didn't have to call it a phantom peak. I'm sure it would still work out even if I didn't. But I'm looking for my notebook here because I do not want to forget this as an example of the phantom peak. So I'm going to just move over to the P's, LMNOP, phantom peak. And I'm going to put here for my book that I'm busy putting together on all these different chart patterns and examples. This is, what did I say, December of 06? No, January and February of 06. So that's 1, 2, 06. Got it. That was C. Okay, phantom peak. And then I get to my peak D right here in May of 2006. I'll put a down arrow. And then we got another one. Now, the question I always get asked is, what's the most difficult buy mode or sell mode? Well, the most difficult is not to identify that I could put a plus sign 1 bar later, the month of June of 06 at 11.813, but to actually put an up arrow. So I can't do that because there's this pattern that goes into the rectangle. It could arch over, just as T-bonds have done, the TLT weekly has done. It can then try to retest the low, the major low of 11.813. So it goes, I call this gray A because it's underneath the major peak D. And as long as it stays there, I could even give me a complete buy mode. I still call it a gray A, or I change the color to say it is a subsidiary buy mode within the context of that major high that was made in May of 06. Then it pulls back, and what does it do? Lo and behold, it breaks out and goes to a D, and then it goes to an E in March of 2008. This is getting interesting. Hold on, Ari, we will be back, and we'll get into the nitty-gritty details as soon as I return. Basil Chapman sitting in for Larry Pesavento. I'll be right back at 877-927-6648.
Folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. What an honor it is for me to do that. And let me just quickly finish this off here. I managed during that period to also do the Silver Weekly, which had disappeared off my radar here. So let's see, B and then a C minus. C minus is always very negative. And what have we got here? We've got an A and a B. So we've got Ari online. Ari trades the silver via the SLV, and he trades the GLD. Now, Ari, what I want you to just complete here is in the monthly chart, the silver continuous contract has had 4 buy modes going to at least a peak D. That alone, in anybody's compendium of technical tools, should be a statement that says that the validity of looking for buy signals that go to at least a peak D can be found in not just tens or hundreds or thousands of charts, but tens of thousands of charts, especially in buy modes, in a major buy modes that we've had since October, November. Now what's happened is that from the low bar, I said it had gone to a peak in March of 2008. It plunged down to October in 2008, it went right down to 9.165 and then had another peak A, peak B, peak C. That's a double top. Let me just double check. That's 19.792. 20. So it went not just to a peak D, it went to a peak E. Now the question, of course, is for many people is that when you get to a D, what do? I always say, you know what you can do? If it accomplishes the D, you can, if that's the goal, then at least take some money off, but you can use a buy stop or a 9-period moving average to keep yourself in most of the position and let that take you out. And look what happens. The D went to doji, 2 dojis, 3 dojis, held the 9-period exponential moving average in a monthly chart to do that. That's amazing. And then soared to the high of April at 48.84, made a peak E, and it came down. Now it's in a down channel unless it can close decisively above, I would even have to say above 37.2, above the high of February of 2012 this year. So that's the monthly. Now let's get to the weekly chart, because this is going to be very important. For the weekly chart to break out, and folks, we're looking at the SI. This is the continuous silver contract. It trades pretty much, the chart will be pretty much the same as the SLV. Now look at this. You're in a down channel making lower highs and lower lows. Occasionally you get a buy mode that gives you a great move, as it did here in May of 2011 at 33.738. all the way to 44.04. Even though it didn't fulfill a peak D, I take that as a buy mode, even if it's a C minus. Now, to fail at C minus, meaning you take out the left side starting point, in this case, the low of May, the week of May the 20th, very negative. Now we're making lower highs and lower lows, so I can, for the first time, confidently draw a down channel. The fact that I've drawn a down channel, does it mean that the price has to stay in? Absolutely not. The price is the price. So this is what I'm going to tell you. So Ari, you have a position in the SLV?
I'm looking to maybe get into a trading position. It's nothing but a trading position. But no, I don't. It'd be a brand new trading position.
Okay, so now what I want you to do is say, now you can see that it's a monthly is so far remaining in a down channel. The MACD and stochastic, well, the stochastic's trying to turn up, but the MACD is very negative, and that's going to take a while to turn up. And in the weekly chart, the stochastic's gone from over 80% quickly down to 67, and the MACD is still good in the fast-moving average. That's a good sign. So now the weekly says, what needs to happen? It needs to clear 37.205. Oh, I shouldn't have put a B minus. That's a B. To get to a leg C. Can it do that? Well, the stochastic says, it's going to be tough unless it turns around really quickly. The MACD says, hey, possibly. Well, possibly says that now I have to go to the contract. What month are you looking at? April?
No, I'll be trading SLV.
Oh, SLV. Okay, let's look at the SLV. So SLV, here again, folks, the iShares, the SLV iShares Silver Trust made a peak E with a cup and ladle breakout back in the monthly chart, September of 2010, and literally soared to 48.35, a 472% gain, and then it pulled back. Now, as I said before, it's in the monthly, says that the SLV is in a declining mode. Now, this is fascinating. In the pattern that I call the dreaded H, in my CD introducing the Chapman Wave methodology, I know some of you just received a whole bunch of new ones were made. No, I should say a new printing has been made and sent out. Some of you have got them. I've got some emails on that. The pattern that I call the lowercase h, it looks just like a lowercase h. If you look at the high in the weekly chart of 29th of April at 45.57, it comes straight down to 31.97, and it makes a little bounce to 37.72 and pulls back, but does not close under 31.97. That is a successful test of the left side, this lowercase h. So in my CD, it's chapter 17 and starts at slide 332, but it actually is all over the show. Now, that says you should be able to get to at least a peak B and maybe a C, because you had a successful test of not breaking the low of 31.97, let alone undercutting it. You didn't even break it. So that takes you to a peak C, and then it fails. And then it plunges the week of the 23rd down to 29.05. Then it makes another H, that pattern I call the dreaded H. You see there's a line down, and then you make the little arch. This time, not only did it break the low bar on the left side of 27.41, but it closed at 26.95. That says normally that you should be able to bounce, but not above the previous arch high. But when you've had a series of these H patterns that go small and large. Look for the pattern to possibly extend once again. So we've had a small one. Now we've got the larger one. The larger one before went to a peak C. Your question should be, can this go to a peak C? Well, if you look at the technicals of the last rally from July of last year, you'll see that the stochastic went soaring straight up to above 80%, and that took you with the MACD to peak C, and then immediately the stochastic plunged under 80%. This time, it's done it in a much quicker move, but the MACD is held. So the weekly chart is saying there is more internal strength at this particular point, and it'll dissipate if the SLV closes under 30.21. Well, 30.21 is about a 5% stop if one was to just jump in right now and say, okay, we'll use the weekly, but I'm going to do something even better. In my daily chart, there's a pattern that I call the Chapman Wave Flat Base Restart. And that says that the breakout level that you started, and that would be at 30.67 on the 25th of January, should go to a peak D and then pull back and come and retest that low. If it doesn't, it could spike up one more time and then come back and test it. Well, that technically is right there, and it's already taken it out, but not on a closing basis, and that was 3 days ago. It went to 30.21. I prefer to go to the bar to make this as strict as possible and say 29.59, the low of the 20th, is probably the level that's going to be absolutely critical to silver, to the SLV. So now the question is, what do you do? When I look at the way it's acting right now, with the stochastic having made a flat, what I call a soft W formation at the bottom, for those of you looking at the TV, I'll show you. It's right here. That's that soft W pattern. That says that if the stochastic, the fast-moving average, is able to close above 20, I'd say 23 to 24%, that could sustain a longer buy signal to buy mode. But you need to have a confirmation with the MACD. Well, the histogram, these little vertical lines, are moving up. Folks, we're looking at the SLV daily contract. It's up 58 cents at 31.82. Now, because you want to use it as a trade, I'm going to go to my 120-minute chart. And that says we're in leg B. The 120-minute chart, which was the 200-period moving average, which was support, is now resistance. If it's able to close, if the SLV can close at 32.21, 32.19 to 32.21, that'll be a very good sign. So this is how I would do the trade. I would start a small position, as we're speaking right now, at 31.83. That position, given that there could be a gap down tomorrow, anything could happen, can have a little bit of a wider buy, a wider stop. That stops at 31.83. I don't know how you feel about a 50 cent to a 65 cent stop, but I feel that with a 31.82 and taking a smaller position, that's the way I would trade it, and I'll explain why. This is the first time in the daily that the price has been above the 9-period exponential moving average. That's that white line that you can see. And the target would be 32.39, the 200-period exponential moving average. So I'm going to suggest you just nibble on a small position here. You have to have about a 50, you can have a 60 cent stop. I would even say that if it closes under today's low of 31.63, it better quickly start moving up. Otherwise, you could just get out of the position. But I like what's happening in the 120-minute chart. I like what's happening in the daily. I don't think this is a major buy by any means, but I would regard it as two price points on the upside as targets. One is 32.39, the 200-period exponential moving average. If it can hold above there for 2 out of 3 sessions, then the 200-period simple moving average at 33.69 is my target. If this was to fail, it's probably going to fail later today and early tomorrow morning. Otherwise, I think it's headed up. So I think it is a trade, but only a trade. I would not get into a position play. And let me tell you something. The trade really is that if you get in now and it's able to cross 32.14 by tomorrow afternoon. At 32.14, you could add another small trading position, and the stop on your core should be a little bit of a profit, no loss, and the trading position, the add-on trading position will be the one that you want to go to, 32.39 and 33.69. So I hope that helps you.
Yes, it does, Basil. I appreciate it.
Thank you very much for calling, and I appreciate you calling. That's Ari. Let's go to William in Singapore. Hi, William. How are you?
I'm great. Thank you. How are you, Mr. Chairman?
I'm very good. Let's see. Singapore is. Oh, what is my IW symbol for Singapore? N. IWN. Oh, I can't find it. Oh, it's EW. EWM, I think, for Singapore. No, that's Malaysia. Okay. I was just, anyway, I just thought I'd quickly grab it since we've got you from Singapore. Okay, you'd like to look at?
Apple.
Okay. Ah, there it is, EWS Singapore. Yes, that rectangle formation. I'm going to talk about that a little later on. Let's go to Apple. Do you have a position in Apple?
Yes, I sold half last week, and actually I bought the option, so I still have probably less than half of position in Apple.
And the option position that you have is what? Is it in April?
It's April, yeah, April expiration.
And 600?
Yes, that's right. You're
okay.
Right.
So let me do this. I'm going to go for 1 second. I just want to grab my option. Let me just here we go. Option. This is going to be fascinating. You're going to see this. Are you able to see my charts?
Yes, I'm able to.
Okay, great. I'm going to go to the option. If I can just find it. Option. Where did it go? There it is. Option analysis. So here we go. Option analysis. And I want Apple. AAPL. And you know what I'm going to do? I'm going to do this. This is the 600 call, right?
Right.
Okay. It's trading right now at $5.60, correct?
Right.
Okay. So now look at this. If I can find it. Give me 1 second.
Sure.
So I'm looking for my chart with the direct correlation. Apple. So I'm just running it through. There it is. Good. Now you're going to see something really fascinating if I can find it. Here we go. So this is the Apple chart, the 1 minute chart. And is that the option? Yeah, that's the March 2012 600.000 call. Now, what I've got on this 1 minute chart is 525. It's in leg B. So okay. I'm going to do this, and I'm not going to do anything. I'm just going to say it's in leg B. I'm going to change that to a 120-minute chart. Let's see if let's make it a 60-minute chart. Okay, so that's on its way down. Wow, this has plunged from the $12 area, from $13. So you've had it for a while.
Oh,
have you had the Apple? You've had it for a while,
yes,
and you took some off, and you've still got the rest. Good.
Yes,
okay.
Correct.
Okay, so let me go to the 10-minute chart. I tell you why I'm going into this very much in the minute detail. There are a couple of reasons. One is, when I look at the Apple chart itself, let me just explain what I'm going to look at first of all. So I'm looking at the Apple 120-minute chart, had that big gap from 568.18 on the 13th. That was the high. The very next day, the high was 576.08. So you've got what is that? What did I say? 68 to 76. You've got an 8-point gap. In the meantime, Apple is gone. Now, if you can look, I'm going to make this chart much bigger, so when you get back, I'll be showing you what I'm looking at and what you have to be careful of, because Apple might be a little tired here. So we'll look at this in closer detail. I'll be right back with William in Singapore, Basil Chapman, sitting in for Larry Pesavento. Dow's up 113, S&P's up 12, and the comp index is up 36.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, and it's my pleasure to be doing so. And we're on right now with William from Singapore, and we're looking at Apple. So this is let me just go through so that you can get my bigger picture on Apple.
Sure.
I believe that at this particular point, I should be calling the move that we had to the last high of 609.65, 609.65, I'm calling it peak C rather than peak G. So if you're not used to the Chapman wave, don't worry about it, other than to say that the gap that we were looking at, which in the 120-minute chart says that we've gone sideways for quite a while, and that the stochastic and the MACD have pulled back very sharply. And I put this as an analogy like a balloon in the air. The air dissipates. The air pulls back, but the balloon holds up. What happens next, as the stochastic and the MACD, if they come back up, the price should retest the previous high, peak F in the 120-minute chart, and that would stop it going down to the gap. Now, that coincides with what I'm looking at in the daily, because the daily says we've used up 3 bars in a consolidation from a doji top. The MACD and stochastic have pulled back, but are still very strong. What you want to see, the market is up 116 in the Dow, 12 in the S&P, almost 13, and the NASDAQ up 30, and you haven't yet got a push above 601.80. The moment that Apple starts to break into the 602s, I suspect it's going to go to 609.70, which will start leg D up. And that's the leg where I would say to you, take off one of those 2 calls, because that's a bonus from what you were expecting. And the other 2, what I would do is raise the stop on one to just under peak C, which would be, say, make it 608. If Apple goes back to 608, and then leave one call, because what you might want to do is that if, say, Wednesday, Apple has gone very close to 609.65, or has actually gone to 611 or 612, call me again, because then I'll tell you what I'd be looking at, because at that point you should still be left with 2 calls.
Sure.
If you are, then what happens is the weekly is extended in leg F, and that's very positive, because it's saying that you don't have the confirmation that you've made a peak F, and it's leg D in the weekly chart. So looking out for April, because you've got weeks to go, right? So there's no real rush. So that's the one thing. The other thing is I would definitely take off one of the calls, at least one, if it closes under 593. Because then it looks like it would probably want to test 590, and I suspect you're going to have another opportunity to try to see one more big rally in Apple. But I'm suspecting we're getting real close in the Apple to where puts would be advisable, even if it's just to get back to the gap in the 570s, which is only 20, 30 points. But I think we're getting closer to that. So I'm saying congratulations on a fabulous trade. The 10-minute chart is saying that it's really struggling here, that Apple, the call, it should be ready. It hit 8:30 this morning, right?
Sure. Yes.
Now, yeah. So I don't think I'd want to see it go below 5. If it starts to go below 5, I think you're going to have a better entry on the call side, lower down in the 3s even. So I wouldn't give away so much of your profits that you don't want to let it go much lower than when you exited on Friday, right?
Right.
So that's the way I'm looking at it. So by the end of the day, if there's another burst of energy and the Dow gets to 132, Apple must be getting to, your call should be getting to $6.80.
Okay.
So thank you for calling. Let's look at it again maybe Wednesday.
Thank you.
Congratulations on a good trade, William. Thank you for calling. Basil Chapman sitting in for Larry Pesavento, and I'll be back on my usual show, the Tiger Technicians Hour. Don't forget, my service is the opening call. I do cover different commodities and the bonds and the futures, so please check it out.